Plotting trades. Good stuff today. So from start to finish, I'm going to be showing you how to plot a trade. Basically what we're going to be looking for, what we will be discussing today, will be charting market structure. We're going to be using indicators as confirmations, something I was just telling you about. Now we're actually going to be applying multiple time frame analysis. I'm going to show you how multiple time frame analysis can be applied, so that way you get a top-down approach. We're going to talk about that as well, and you can actually see how the time frames correlate to each other, because it is important to take note that on a 15-minute time frame you can see a bullish outbreak, but on a 4-hour time frame overall can still be bearish, or on a one-day time frame. So you can play a long into a bearish resistance point or something like that. So I'm going to show you how you can actually look at multiple time frame analysis to make use of that in your trading. Then we're going to talk about risk management, how you can actually manage your risk. We're going to talk about the rules that you should. Let me see. Is there any way I can get that to another screen? I don't think so. I think you're seeing those pop up, and I'm sorry about that. We'll try to ignore them. But as I was saying, a lot of people don't really talk about risk management, or they try to give you this something 3% rule set, never use more than 3% of your capital. And that's a good rule, but we're going to talk a little bit more about risk management and what you can do to break the rules in order to increase your trading capital. And we're going to take a look at some emotional management, because I think that's something that's overlooked a lot. Nobody talks about, well, some people talk about it, but it's not often expressed in the in many trading videos that I see or informationals, that emotions have a big part in trading. And we're going to take a look at how you can actually, hopefully, we're going to take a look at how you can change your idea even after a trade started without emotions. So it's okay to change your idea on a trade, and we'll talk about how we can do that without emotions in this presentation. So here we go. Let's go, guys. I am super excited. First, we're going to be charting market structure. So we're going to check the daily time frame. What we're going to do on this daily time frame is identify areas of support and resistance, look for a possible wedge. Trading a wedge or an outbreak is generally a safer area to set up a trade. And I'll show you kind of what a wedge looks like if we can find one. We're going to need to identify an active and valid trend. So it's possible that a market is in usually one of three phases. We have a consolidation, which means price is tight, trending sideways. We have an uptrend, obviously price is moving upwards. We have a downtrend, well, obviously price is moving downwards. Those are the three market phases. There's nothing in between. It's either an uptrend, a downtrend, or consolidation. Now, if you're getting ready for a trend reversal, there are signs that can point to that. That is a riskier trade than trading with the trend. So if you notice an uptrend, you're going to want to trade with the trend because it's your friend. I say that all the time. It's a good model to live by. Trading a reversal could be much more profitable, but it carries a greater risk. So we're going to need to identify our active and valid trends to see where we can trade in. And then we're going to need to form an opinion on price action here first, before using indicators. So think about it like, I'll tell you, the indicators are like your buddies, right? You need to form an idea on price action first with the candlesticks and market structure and trend lines and horizontal support and resistance before you look at indicators. So it's like you get an idea first, and then you go and talk about it with your buddies. And Joe Blow is the RSI, and the RSI agrees with you, but Karen's the MACD, and Karen doesn't have the same idea as you, or whatever, right? So that's a disagreement. That's how you can look at indicators. They're either going to confirm or deny your idea. So charting market structure, let's go ahead. I'm going to take, just to show you that you can use this anywhere. Let's go, guys. First person to drop a coin pair in here on TradingView, I'm going to analyze that coin. So just so you can see that this is absolutely random, put it in the chat. Let's go. First coin to pop up. I would like to analyze that coin. TLM USDT. All right, I got TLM, first one. Sorry guys. Looks like it was TLM. All right, TLM. Let me exit this, go to my trading view. All right, I'm gonna need to move this actually. Oh, never mind. Okay, cool. TLM. Let's see what we got here. Never heard of this coin. What is this? All right, cool. So What are we going to do first? What are we going to do first? Where is my, there it is. What are we going to do first? We're going to check the daily time frame first. Okay. So we need to get to the daily time frame. That's a 3-minute time frame. We're not scalping right now. So let's take a look at our daily time frame. All right. Excellent. 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 So here we can see normally a lot of people ask me if I play by the wicks for trend lines, and I would like to say yes. But looking at this trend line, I mean, there isn't one. So I'm not going to use this wick. This wick is dead to me. Let me see what I can find on the daily time frame. I'm zooming in now some more so I can see where we are. So here is the lowest price point or price. Here is the lowest that price ever was. So there we go, about 0.6. I'm not going to put it right on the money because it would take a little bit more time, and I'm trying to rush through everything to show you how to do this. So here I have a wick that looks pretty plausible. Here's some more. I'm going to try and connect these. So that looks pretty good. It looks like we've already found a wedge just by connecting higher or the highs and the lows, right? So here, if we could see, if we were connecting low points like these, let me make this red. So we're connecting these because they're high points. This is a high point in price action. This is a high point. This is a high point. So this is a valid downtrend. This is an active downtrend. Looks like we're already attempting an outbreak here. So if I was looking at an uptrend, if price were going up, I could do something like this. See, now this is an uptrend because I'm connecting these points here. This is a low point in price action. This is a low point. It goes high, low, low, high, low. So connecting the low points, I see an uptrend, right? So if I was trading this right here, this is a wedge. And if this was respected, I could have played hoping this outbreak would continue, something like this, but it didn't. So now I'm just going to back that up. And this is what happened. So it dropped down. And now we're trading here above this floor. So here it looks like we have support here, 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 here. So I'm going to try and draw a support zone right here, right? So I'm looking at the daily time frame. Here's actually that's not good enough for a line. So let me make it a zone. So here, I'll make this a zone. Yeah, that sounds better. That sounds better. There we go. That's a good little zone. So here is obvious resistance area. Got some resistance here, here, here. So this is immediate resistance. This is what we would call a consolidation. Price is actually in a consolidation right now. Trading within a consolidation is a lot harder because you don't know which way the breakout's going to go. So you're guessing you're throwing a dart in a dartboard. Waiting for an outbreak and for a trend to be identified is much better. Here we can see this was a downtrend, so trading off this would have been a great idea. But like I said, now we're in this consolidation. So this is an area of resistance right here. I'll see that. So not too much, not anything great going on here. Sorry. Oops. Jeez, I need my colors, guys. There we go. Okay, so here's an area of resistance. Let me clone this. Here. There's some resistance right there. Playing off of it right now. So yeah, there's no active uptrend here. This is a consolidation playing against a downtrend. So we do have a wedge. Awesome. We're able to see that. So let me just, this is in my way now. Let me see if I can move this. There we go. See if I can move that right there. Okay. So we have identified areas of support and resistance. Looking for wedges. We found one. We actually did find a wedge. We identified active and valid trends. So our downtrend, looking at this chart here, our downtrend is the most active valid trend. If we zoom in on this right here on the daily time frame, this is a consolidation range. Price is consolidated in a, wow, that's actually a big consolidation range. 52% consolidation range. So wow, zooming in on smaller time frames, that would actually, we're going to see what those candlesticks looks like, and you'll see what multiple time frame analysis is. But wow, Nice, super huge consolidation range. So that's what we're looking at right there. Let me come back here. So we've identified our active and valid trends. Now we need to form an opinion on price here first before using indicators. Okay, so looking at this chart information here, I see two possible options. This candlestick on the daily is showing rejection, right? Price traveled up this high. Price traveled up to the top of this wick, but ultimately faced rejection here around key areas of previous resistance, right? This is the most recent resistance. Now, this is also a level of resistance. This is also a level of resistance. But this is the most recent level of resistance, and that's where we would be targeting first if we wanted to break out upwards, if we were trying to make a long scenario out of this. So we'll see if we can find any patterns. Let me show you what some patterns might look like. Where are those little things at? So here we go. If you're familiar with trading patterns, something like three drivers or head and shoulders is something that everyone's really familiar with. So we can see if a head and shoulders was here. Doesn't quite look like it. I mean, I could try to force something here, but that would be ugly. So head and shoulders kind of looks like this. Not saying this is perfect or this is a head and shoulders, but that would be an inverse head and shoulders. So just for example, you would want to see if you could find a pattern, any kind of pattern, like a wedge outbreak or something like that would give you more confidence to make this, take this position. I can't get this thing right. Where's my deal at for this? Oops. Sorry, guys. Can't see where my deal is for this. There it is. Oh, wrong one. All right. Now then. So looking at this, my opinion is that this consolidation range needs to be broken. I think that we're getting over this downtrend line here. So there is some rejection along this resistance point, but it's possible that price could come up into these ranges. So if I wanted to set a projection, I would say that right now, my opinion is that price is looking for an outbreak and needs more confirmation before I could find, a reasonable entry into this. If I wanted to jump in on a super long, I could shoot up. This is crazy. Back to all-time high would be super crazy. So there's plenty of profitability in this, even to an area of recent resistance right here, be almost 100%. So if you want to target that, then you might need to wait for this to be confirmed. Another daily close outside of here would be great. If this gets rejected and dropped back in like this, see, this is how, let me take a swig here. So this is how you will see first we had this outbreak attempt, right? So this is like the fake out. People got faked out here. A lot of people were like, oh, it's breaking out, it's breaking out. And then boom, they got dumped on. But we actually did find support here in this area. So now we're testing it again. So because there was these strong candles here, if this would have continued rejection and went, these next two candlesticks were inside this trend line, that would have been indicative to me that this is possibly we're going to see some more downside. But this was like the shakeout. The bears tried to take control, but support was gained, as you can see by this wick. And then it's been strong ever since. So here was pretty strong, but indecisive. So bulls pushed up and then didn't see any fight from the bears. Now the bears are fighting back again. Every candlestick is a war between the bulls and the bears. So we have looked at our market structure now without any charts, without any indicators. So now that we have an opinion on price action, let's go take a look at some indicators. So let me put this on the full screen, nice and pretty, using indicators as confirmations. As I had said earlier, apply indicators after you have formed an idea about the market. Indicators are lagging. Some of them more so than others. For example, the ADX indicator has to take information from closed time periods ranging from daily time frames. So it's definitely more of a lagging indicator than others. Not to say it can't be useful, but that's just an example. Price action must happen first. Therefore, price action is king. Price action is king. I don't care. Price action is king. Nothing else matters. In crypto, there is this funny thing that happens with external influencers, social media, weird shitcoin communities. The news can play in event or can play a part in crypto outcomes, but it's only temporary and the market will correct. So if something happens in the news and some crazy event takes place, the market will correct. So price action is king. You need to look at these areas of support and resistance to see where your possible correction might be. So then after we have that, like I said, we're going to use our indicators as confirmations or denials of our ideas or opinions. So there's a ton of indicators out there. Which indicators are the right ones to use? Well, some that I use, ones that I use on almost all my charting, the exponential moving averages helps me find dynamic support and resistance. Nitrous bull helps me find dynamic support and resistance. RSI is the relative strength index, helps me determine if an asset is overbought or oversold. The MACD is a moving average convergence divergence indicator. So it takes the moving averages and plots them in the form of a line signal graph and histogram. The ADX is the average directional index. It tells you the strength of a trend. Doesn't necessarily tell you, it doesn't mean up, and down doesn't mean down. Tells you the strength of a trend rather. And there's many other indicators. Those are the ones that work for me. So I'm going to try and take a look at those now, put them on my chart and see what's good. How do I get, oh, sorry, trying to exit here. There we go. So let me come back now to my trading view and bada boom, bada bing. Let's get some indicators put on here. Here's my exponential moving averages, 9 and 26. Now, guys, I'm not going to try and tell you in depth what each one of these indicators do. I've done a webinar on almost every one. I've definitely done a video on every one. So check into those after this and just try and stick along and see how I'm using them. So I got the 9 and 26. The 9 and 26 give me my immediate trading ranges. The 50 and 100 give me extra levels of dynamic support and resistance. And the 200 is a long-term read, so you can actually see, I don't even think it's plotted here yet. Look at that. On the daily time frame, it's just popped up right here because it has to take the information from a certain time period. So look at that. 199 bars. So the 200 EMA on the daily time frame takes the information from the past 200 days. There's 199 days worth of information here. So here is your 200 EMA right here. Look at that. Barely coming on. So that's useless to us on the daily time frame. Absolutely useless. We can see that this is the moving average for the 200 days is right here, but there's not much back data for that. Nitrous bull is something that I use more so at the end of my trades to confirm or deny my ideas. So like here you can see these are automated support and resistance lines generated by nitrous bull. So without going too much into detail about what nitrous bull does, this is automatically generated as support or resistance. Here you can see this is red because it's resistance. That's almost where we just charted our resistance. And here you can see this is green because this is support, and that's the top of our box of our zone. So being able to map these by yourself is great, but nitrous bull also does it for you. Look, see, here's this green line that we put down here. Nitrous bull put one right there. So the accuracy is pretty stunning. If you're good at technical analysis, you can see this with your eyes, but having the indicators definitely help. So let me turn that off now for a second. This is something that I've found recently that kind of helps you to see where the immediate trends are. Can make things very sloppy depending upon what's going on. But you know, it is there. Actually, it helped me see that uptrend that I didn't see just now. So there we go. Look at that. Got me here. Boom. So nothing wrong with indicators, but you need to form your own ideas first. That'll work better. Cool. So now I can actually see another wedge playing out here. Awesome. Now I'm going to add in a couple more. I took them off because they were clouding my screen before I started, and I didn't want you guys to have a lot of junk that you didn't know what was going on yet. Boom. So here are my favorite indicators, dude. I'll use these every time I'm trying to make a trade. Boom, boom, boom. So now, what was my idea? My idea was that we were playing this outbreak here. I was hoping price would go up. I didn't even connect this downtrend or uptrend line, but there it is. Here's a low in price action, low in price, low in price. So here we go. We have a uptrend now. So we're playing this and looking at my indicators now. The RSI isn't telling me jack squat on the daily time frame. It's right in the middle of 50. If this was happening, if the RSI was down here when this was happening, this would give me a better motive to take a long position. But right now, I can't, based off the RSI, I can't tell if I need to go short or long on this. So the RSI is not agreeing or disagreeing with me. It's slightly overbought, just slightly. I mean, 50 is a good median. So the RSI is not telling me junk. The MACD looks very interesting. So this MACD looks like it's fighting here and it's converging in price. So we could see this reflected here, that price is finding a nice support line. And generally after something like this, after a peak, price goes down and it could cross under like it did here. Here's only one. Here's what I call like a double bubble. So sometimes the double bubble happens. Sometimes it's larger than others. And sometimes it doesn't. Sometimes it just goes one up and one down. Here we could see that it's fighting really hard to remain bullish. And actually, if we zoom in on that, there is a bullish cross. So this is a bullish indicator on the daily time frame. This is a bullish cross on the MACD. So that would indicate to us that we're looking at a bullish scenario. Now, again, obviously here we had this rejection candle. So we'll need to play it safe. If we're trying to find an entry here, we might need to wait for a better one. But we can see that we are on the verge of an outbreak, and on the daily time frame, this looks like it's about to break bullish. So if this continues up and we see the column start to increase like this, we can feel a little bit better about wagering into a long position. Now the ADX indicator is a very interesting indicator. It tells us that the trend strength. So here we could see this trend is losing strength. Move that out the way. This trend is losing strength. So here we had the trend gaining strength, right? This was gaining strength, boom, starts to lose strength, gain strength, lose strength. Now we're gaining momentum. Now it's starting to curve up. It's not sloping down anymore. It's sloping up. So it's making a higher point than it has before. If I can zoom in just a little bit more, look at that. So now this can be a bit confusing. The first part of sloping up was uptrend, then it falls down, and then it's sloping up again. So this is telling me that the uptrend is looking to gain momentum and this consolidation is losing strength. So this trend was a sideways, seemingly downtrend. If we even put something on right there, a short-term downtrend, and we could see the active trend was a downtrend. So that being said, this active trend is losing strength. The downtrend is losing strength. So that gives me another reason to be bullish on this. So I have MACD and ADX telling me that this is bullish. Now let me look at my exponential moving averages as well. So I can see here 9 is usually a first layer of support and resistance. 100 and 200 are ultimately bigger layers of support and resistance. So here is a trading range. See price, it's possible for price to come back up to this range as over the last 200 days. That was the average price paid for this asset. So it wouldn't be alarming to see it go back to this price, to 0.2463. But on the flip side, so we can see how much, let me show you. From the 9 EMA, this is the range, right? It can go all the way up here, 28%. Why? Because that's where the 200 exponential moving average is. How far can it go down? Not very far. It can never stray too far away from the 9 EMA. Never. So since there's no other lines below the 9 EMA, it's not possible for it to come this far in this direction without seeing some of these other EMAs consolidate. Now, essentially, what this tells us is that this is a valid downtrend. This is a valid downtrend because they're all underneath each other. 9 is underneath the 26, so here's the downtrend cross. 26 is underneath the 50. Here's a downtrend cross, and the 50 is underneath the 100. So this is a valid downtrend. So if you're playing if you're trying to take a long on this outbreak, now you're counter trend trading. So we can see that this was a consolidation range. We zoom out like that, it looks pretty tight. Zooming into it, we can see that this is a downtrend. Here's an uptrend. Look at the difference. Look at the difference. The EMAs are on top of each other. Here they are below each other. So let's look at the difference. Cross, downtrend, cross, uptrend, cross, downtrend. Okay, so now we have took note of our indicators. So we can see we have an idea. We just walked through everything. So we can see our trading ranges based off of that. Yeah, let me throw that on there one more time. So here, support, closest support and closest resistance on daily time frame. We map both of those out, so we're good. All right. Now that we have used our indicators as confirmations, let's apply multiple time frame analysis. So traders generally make use of 3 time frames when trying to plot a trade. Can be any 3 time frames, but the time frame relativity does matter. So if you're trying to be a day trader, you probably want to make use of the 4-hour time frame to chart your trades, the 1 hour for entries and exits, and the daily time frame for the larger picture. If you want to be a scalper, you might want to use something like 1 minute for entries or 5 minute for entries, 15-minute for the trading idea range, and then the 1 hour time frame for the bigger picture. So it's going to be dependent upon what type of trade you're actually trying to execute, and the relativity does matter. So if you're trying to make a scalp trade, you shouldn't there's not really a reason to be staring at the daily chart. It's important to start from there to see what's going on, as we just have identified a range. It's very important. But if you're trying to make a scalp, you shouldn't even be looking at the daily chart. After you have your idea, of course, you need to be using much smaller time frames, because you're looking at a 1 minute time frame or 3 minute time frame. There can be a bullish cross on the 15-minute time frame. It's playing into a bearish area of resistance. So whatever you're seeing on the daily time frame, you're never even going to get to in a scalp scenario. So a top-down approach is recommended. The trading time frames should lie in the middle. Like I said, you should use a larger time frame as the general path and a smaller time frame for entry and exit targets. So you need to relay the information presented by both candlesticks and indicators to find trading ranges. I'm going to show you what that looks like and determine how long you want to be in a trade at this point. So when you're doing multiple time frame analysis, it's not okay to set up a target, a take profit target, and a stop loss goal without a trade duration. That is a huge problem, a huge mistake that I see people make a lot, very often. Is guys, where people ask, how can I improve my trading? Guys, putting a time limit on your trade, trying to predict the time that you want to be involved in that trade is important. You can't be looking at a 1 hour time frame, doing all your technical analysis on a 1 hour time frame, and end up sitting in that trade for 2 or 3 days. That's not good. That's not good. Can't be looking at 3 minute time frame and stay in the trade for 5 hours. Not good. You need to give yourself, okay, if I think a 0.65% move is going to happen, when do I think that can happen? In the next 3 candlesticks? In the next 12 candlesticks? Give yourself a time range. So determine how long you want to be in the trade. Let's take a look at that. Let's take a look at multiple time frame analysis now. All right, multiple time frame analysis. So turn this into a 3-way. What's this coin called? TLM? Well, that's unfortunate. Dang it, I should have had it all. If I would have had it set up like this at first. Let me see if I can actually do that real quick. That's upsetting. Okay, so now, that's pretty upsetting. Yeah, see, if I make a move on one, it should go across all of them. So I don't know why this didn't sync over. It's really unfortunate. After you do it on the daily time frame, it is better to zoom in. So now I can see, like, right, I have all this stuff here. Here's the 4-hour time frame. So that's super unfortunate. That is not showing me everything I just drew. Oh man, that's upsetting. Nope, didn't work. All right, well, unfortunately, I can't see these lines across multiple time frames like I wanted to. I'm going to drop this back to the daily. We're still going to go through with this. It's still going to be able to make sense. So let me just back out a bit and I'll try and draw these lines. So here I can see here's an uptrend. Here's my uptrend. All right, so here I can see my resistance points. Again, there's those suckers right here. Lower that down into these wicks. All right, so now I can see that kind of the same setup there. That's like our immediate range. So here now I'm looking at multiple time frame analysis. It's super important. So I'm not going to be looking at a scalp or anything right here. I'm just going to be showing you. So now we can take note of a couple different things. The RSI wasn't telling me jack squat on the daily time frame, but now here I can see on the 4-hour time frame. Look at this. I got some divergence. So this is telling me that there is going to be some pullback, right? If we were just looking at the daily time frame and wanted to try and just jump in here because we think there's an outbreak, wrong. We have divergence here, so this is not the best time to go long. This is going up, this is going down, so that's divergence. That's an easy trade. So we're looking, what price is actually already kind of playing out this divergence. So now it's looking for support. So as we can see here, these were really tight ranges in the EMA. So it could have went in either direction, right? It could have strayed far here, but not too far above this in this scenario, because that's where the 200 EMA was. Here it couldn't have gone that far down, as you can see it didn't. And so now we're looking at a pullback. The first area of support I would say would be to this 9 EMA here on the 4-hour, because we're already blown through it here, and now it looks like it's going to be using this as resistance on the 1-hour. So on the 1-hour time frame, the 9 EMA is going to be used as resistance. Looking at this here, this is the 9 EMA. So if I look at it on the 4-hour, here's possibly my first support check right here off the 9 EMA. Sorry, I'm trying to make it straight. I'm OCD. There we go. So we can see that here. That's here. That's here now. The 9 EMA first level of support on the 4-hour time frame for the 9 EMA is here. Look where it is on your 1-hour. So here we have the 200, which at this point, after it breaks up, usually comes back down for a test. So the 200 EMA, even, I'm going to draw that one now, see where it's at too. Look at that. Look where my 200 EMA is now. So these are areas of support that I could be looking at for the, now on the 1-hour, is very plausible, right? It looks like we can probably check that here. Price could do something like this. Where's my little draw tool? Oh, come on. This one right here. No, here. There we go. So price might do something like this, crash through here and then hit this, bounce up, come back to this resistance point, go through here. It's just a possibility, you know. I'm not saying that's what's going to happen, but now that we're using multiple time frame analysis, we actually have an idea. If we're looking at the larger time frame right here, that would be really hard to chart. You'd be playing within one candlestick, but here you can see there's multiple candlesticks now that we could be looking at. So I'm not saying that is the way it's going to happen. I'm just saying that's a possibility. So this is kind of how you can relay data across different charts. So here we've seen that this is fighting a bullish cross. Now we can see that this is actually declining in value. This one's lower than this one, so this is declining. It's still technically a bullish MACD signal, but here on the 1-hour, this is a bearish cross. We've seen a 1-hour bearish cross. So that is indicative of more downward price action. So this would possibly be an area of support. So if you want to make a short now, you can traject a short to this area. Or if you want to take a long, you'll need to wait probably for here for a better entry if that's what you think. And then looking at the ADX, this isn't saying much. The trend's kind of stagnant right here. There's not much going on. As we can see, there is no trend. So the ADX says there is no trend. This is not a trend. This is super volatility. Now here we can see that the ADX uptrend was gaining strength. Now it looks losing strength. This is going down. So This is going down. Looks like the recent trend, which was an uptrend, has lost its strength. It's losing its strength. So now that we have used the top-down approach and relayed the information from candlesticks and indicators to find our trading ranges, right? That's what we just did. So here we have our trading ranges now. This is on the 4 hours of trading range. Here's our 4 hour trading range, how it relates to the 1 hour. Matter of fact, we can even pop open some nitrous bull here to see what our other trading ranges are. So we have areas of support and resistance. So there's mine. Nitrous bull called it right here based off the bodies. Looks a little bit closer there. Nitrous bull called some more down here at the bottom. So here is more trading ranges, right? So now here's an area of resistance. Looks like it was broken. So if you want to take this short, look at that. It's pretty close to our 9 EMA. Here's a target. Here's another target. So it's just slightly off from what we projected. These are nitrous bull support and resistance lines. Excuse me, guys. Let me take a drink of my coffee. Good swigs there. All right. Okay, now we need to determine how long we want to be in a trade, right? If we're trying to set up this trade, how long do we think we can actually be involved in this? How many candlesticks before price comes here? Let's just say, for example, we want to take the short because we're trading with the trend. This is a bearish cross. I'm going to try and make my entry based off this. So let's just say, for example, I'm not going to say this is the right way to do it or the wrong way to do it. I'm just trying to show you how to set up a trade. So this is the time frame we'll be looking at. So let me take my measuring tool here. And I can see that happening in a few candlesticks, right? Maybe 3 or 4 candlesticks. Here it looks like 6, actually. So maybe about 6 hours. Yeah, 6 hours would be a pretty good window. So now I'm not letting anything else sway my ideas. I have a time frame in mind. So let us move forward, right? Multi-time frame analysis, key to identifying trading ranges. I just showed you guys that trading ranges line up differently across multiple time frames. So risk management. All right, guys, we're almost done. This is an important part. Determine how much you're willing to lose before anything else. If a reasonable stop loss is outside of this range, then do not take the trade. What do I mean by this? Let me just come over and show you immediately what I mean by this. Determine how much you're willing to lose before anything else. And if a reasonable stop loss is outside of this range, don't take the trade. So let me just come back here. Now, just to express that first point, if you're trying to take a short, it means you'll be doing something like this, where you're trying to wager on the price going down. So if I'm just going to set my TP there, for example. Now, an area of recent resistance, to trade off of this would be very unfortunate. I would not really like to take a trade at this point in time. But if I was going to, I would set my stop loss right above this 9 EMA here. Because if price comes back above this and continues to find support, then it's possible that this uptrend is going to continue, because this is technically a valid uptrend now. We have multiple EMA crosses. Taking a short is almost counter trend trading. We have a bearish cross here, and this is losing strength. So currently the most active trend is a downtrend because it's playing off the 9 EMA as resistance. But overall, the larger trend, like we were talking about on a different time frame, is bullish. So if you want to take this short, you need to understand how far down you can go. Is it realistic that you're going to come back down to the 200 EMA? Well, looking at it on another time frame, you can see here, you know, the other crosshair is right here in the middle, right here. So here you can see how realistic it is. It's not actually that hard to imagine, as you have multiple support EMA lines here. So in some scenarios, it might be different, where everything's all clogged up together right here. But so back to the risk management. If you are putting your stop loss right here, that's a reasonable stop loss right here. This is a reasonable stop loss because it's just above the 9 EMA. Now, if minus 2.16% sounds terrible to you, and you don't want to, if you're, whatever you're trading with, whatever balance you're trading with, if that does not sound good to you, then don't take the trade. I know people personally who will set up like a 0.5, there you go, like a 0.5% risk to reward ratio. And if they can't make, if that doesn't make sense, they won't take it. And that's fine. That's absolutely fine. There's nothing wrong with that. If you want to keep your stop loss tight and have that kind of management system, that's okay. If you have a really small stop loss, you're not going to be losing a lot of money per trade, but it's possible that in a scenario where you have a small stop loss, you're going to lose out on a lot of trades because your stop loss is just so tight. So if I wanted to set a reasonable stop loss in this scenario, it would be right above this area of resistance. Nitrous Bull is telling me this is resistance. If it gets broken, I want to get out of this trade at minus 2.16%. Can I live with that? If you're going to be losing sleep over this position and you can't stand the thought of losing 2.16%, don't take the trade and look for another one. That simple. Don't have to beat yourself up over trading. It shouldn't be stressful. It shouldn't be hard or difficult. It should be fun. It should be like a game. I understand it's a lifestyle and we are making money from it. And it's very important for us to make money to feed our families and pay for bills. But all work and no play makes you a dull boy. You have to be able to come into these markets without stress and be able to say, okay, I know that if I lose this money, I'll be okay. That is very important. So that being said, we'll come on back now. So determine a risk to reward ratio suitable to current market conditions. That's kind of what we just looked at. I showed you how I'm playing off the 9 EMA if I wanted to go short. So in different market scenarios, that guy who wants to go 0.5%, if he can't line that up properly along support or resistance, he's not going to take the trade. But if you want to try and get in at some points and you're capable of risking these kinds of amounts, then you have to make sure that it's suitable to the current market conditions, kind of like what we just did. So then you need to establish a confidence level in your projected trade, right? Confidence is key. In that trade that we just set up, that short trade, not very confident in it. I have different time frames are telling me different things. The MACD is not lining up across multiple time frames for me. So I'm not very confident in that projected trade. If I was more confident in it, if I could have, let me close this real quick. Oh, sorry, fellas. Okay. If I could have seen this right here, dude, that would have been awesome. I would have totally got this divergence here. Even off the first one, I would have got this divergence. I would have tried to play off this divergence here. That would have been a super confident position for me to enter. And I would have put more of my capital into the trade if I could have found that good scenario. So that leads me to the next point. Determine position size, amount, and or leverage based on this confidence level. So plenty of people tell you guys all the time, I'm sure you've heard it, never use more than 3% of your trade and of your balance in any trade. That's great advice. That's super good, super sound advice. But that's not the fastest way to account build. Everybody wants to get rich. We're not here for any other reason. We want to make money. So learning how to wager more funds on a trade is important. So this trade that I've set up here, this is barely 1-to-1. This is hardly 1-to-1. I'm risking 2.16% loss for 2.96% gain. This is hardly a 1-to-1 ratio. I would probably put 3% of my money into this trade if I wanted to take this trade. If I was super confident in a position, I might put more leverage or more of my funds, maybe 20% of my funds. If I'm on futures, there's no point in using leverage. If you're not using your entire balance, we do talk about anti-liquidation guides, but to be quite honest, if you're on futures, you should be leveraging your entire amount with low leverage. If you get into high, I don't understand the correlation between why people think that they use less balance and higher leverage is more profitable. It's almost about the same thing, but that's neither here nor there. If you are super confident in a position, then put more money into that trade. But don't put so much money into the trade where you can't take your eyes off the screen or you can't have dinner with your family because 20 minutes is going to liquidate your life savings. Don't do that. Don't put that much stress on yourself. You don't need that. You don't need that. So now that we have determined risk management, guys, I'm going to be going into the last portion of this. And this is emotional management. So we're done looking at the charts for now. So fear. Traders become fearful of the market usually for one of two reasons. Some are new to trading and have no idea what to do, so they don't do much in fear of losing their funds. It can be overwhelming, everything I just talked about. If you don't know anything about it, you're not going to know just based off this presentation. You'll have to study up on the RSI. You have to actually practice charting these things, support and resistance. You're going to have to practice these things. So I understand it can be scary. I was there once. Another reason that is a trader may have experienced a significant loss in the past, and now the trader does not take risks that could have been profitable. So like I said, you have to establish a confidence level. And if you're confident in that trade, you can take it. If you're not, then don't. So in order to remove fear from your trades, you need to make sure you're managing your funds properly. Deleting fear can be very easy if you manage your funds properly. You should never invest more money into the market than what you can afford to lose. Plain and simple. Absolutely plain and simple. Don't gamble with your rent money. Don't gamble with your child's college tuition. Don't put anything into the market you can't afford to lose. Yes, I think Bitcoin's going to 100K, even beyond that, but that's entirely speculative. So you have to decide, do you want to speculate on that or not? If you know you can survive losing whatever you trade with, then you'll be less worried about losing money and more capable of taking calculated risks, just like I was talking about. You can increase your trade size if you're confident in a position. That's a calculated risk. Your account will start to go quickly once you have deleted fear. I promise. If you're still trading with fear, this is how you can beat that. Greed. A lot of people don't realize they're getting greedy. Have you ever heard the old saying, bulls make money, bears make money, and pigs get slaughtered, right? That's because bulls in the bull market make money, bears in a bear market make money, and pigs, those greedy bastards, they get slaughtered, right? Pigs are just led to the slaughterhouse. They just follow blindly to their deaths. Don't do that. This refers to market cycles and traders. So if you're greedy with your profits, you'll more than likely lose your money. Without realizing it, traders get greedy when their trades passes their take profit goals and they remain in the market. They think that since the position is in their favor, it will continue to be in their favor forever. Let me tell you, markets can fall as quickly as they rise. So if your take profit goal is achieved, it means the trade did exactly what you thought it would. So why would you want to leave that position open? If your profit target was met, you should close the deal and look for the next trade setup. That's a general rule. Don't get greedy with your profits. Take your profits and live to trade another day. So there is, for more advanced traders, there's this thing known as dynamic trading. So a static trader will set one take profit goal and one stop loss, let that trade play out. A dynamic trader will raise the stop loss and raise the take profit goal as price levels are hit. So for example, if price is going up and you hit TP goal 1 and it shoots right through that, then you can actually move your stop loss to a profitable position. And when price comes back down, if it does, you get stopped out for a profit. But if it continues to go up, you just keep readjusting the targets. So that takes skill. And when you're doing that, you have to be conscious of your greed level. So it's not a bad idea. You can make a lot more money doing that. Please don't get greedy. Revenge. Sometimes when a trader suffers a loss in the market, they will get feelings of revenge without even being aware, right? It's possible we can get these feelings invoked upon us without even being aware. Losing anything does not typically produce a good feeling, and losing funds can sometimes create a vengeful desire for more. And quite often, an inexperienced trader will try to recover a loss quickly, only to be met with another loss due to lack of planning. It's happened to me. It's probably happened to some of you guys in this room. If you have lost out on a trade before, you're like, oh man, I got to make this money back. I can't believe I just lost $200. I got to find another trade. Jump into a trade and lose more money. Why? You were trading based off emotions, for one, and you didn't take the time to properly analyze the market, probably for two. If you're deleting your revenge factor and you take a loss, I've heard Gray say it multiple times, even myself, if I eat a big loss in a day, like $1,000, I'm done for the day. I'm going to go do something else. Maybe take a break for a few hours, maybe try and come back and see if I can figure something else out later on in the day. But if I just watched myself lose $1,000, I'm done. I'm done. I need to take a break, need to cool off. There's no way my mind is going to be functioning properly for me to try and take another trade right away. So not every trade, you have to understand that not every trade that you, excuse me, as a trader, you have to understand that you will lose out on some trades. Not every trade will go the way you want it to, and that's completely normal. Don't beat yourself up about it. Instead of getting upset, try to take a look at why your analysis was wrong and use that to try and set up a better trade next time. So if you lost out on a trade, there's a reason why. Try to be self-critical. We don't genuinely like to criticize ourselves, but try to be self-critical in this because no one else is going to do this for you. No one else is going to tell you. I'm not there to stand over your back and say, hey, dude, you did this wrong. This is where you're messing up. This is what you can improve on. When you lose on a trade, you need to take a look at it, why, and see what you can do different next time. Or if you can do something differently, try to make that adjustment. Euphoria. All right. So this is perhaps the easiest way to lose your money is in a time of euphoria. For those of you who were here with us back in the May fallout, April, May fallout, a lot of people were getting used to living in a bull market. We were all just dumping our money into Bitcoin because it was going to the moon. And a lot of people got hurt trading. Alts haven't recovered. Bitcoin, thank God, did come back, hit new all-time high. So it has recovered. Many altcoins I know, I think FLM token, Filecoin, FIL coin. I got my ass ate on a file trade. I was too euphoric in my profits and just dumps off. So it's the easiest way to lose your money. When traders take a big profit or they're successful in a series of trade, they can become overconfident in their trading abilities. They think they're Superman. They think they're invincible. I'm the best trader in the world. I just made $2,000 yesterday. I'm going to do it again today. So this can lead to poor risk management and send the trader into emotional disarray. It starts off good when you're winning euphoria, but if you go to sleep on a win, you'll wake up with a loss. So don't let your emotions get out of check. When a trader gets too comfortable winning, you might forget what losing feels like. So there isn't a single trader on earth with a 100% win ratio. Everybody is going to take a loss at some point. I do it. I don't know. I don't want to speak on Gray. I don't know what his trading portfolio looks like, but I'm pretty sure he takes losses too. We all take a loss sometimes, guys. We can do stuff to manage it. We can learn from it and try to prevent it from happening again. But I don't think any one of us will have a 100% win ratio for the rest of our lives. If you do continue trading for the rest of your life and make it full time, and you never know which trade it's going to be. So you never know which one's going to be that loser. So it's best to keep calm and collected when you're becoming more consistently profitable so you can properly manage your resources. So to develop a trader's mindset, it's not difficult to achieve, but it will take time. If you're new to trading, you must accept that the markets do not care about you whatsoever. They don't care. They're going to do what they're going to do, regardless of what you want, how you feel, how much money you have in there, if it's your rent money, if it's your dog hospital bill money. The market does not care. So you need to learn to use technical analysis to predict possible market movements, and you must also develop a strategy or a few strategies that work for you. And after you've established your risk to reward ratios, do not break them for any trade. Like I was saying earlier, there's that guy who goes 0.5%. There's that guy who goes minus 1%. If the trade goes minus 1%, he's out every time, no matter what. So he'll try to set his entry up along to a point where support or resistance can make his stop loss 1%. That's great. If you want to try and play off the market scenario like we were showing earlier, that's okay too. They need to just be consistent though. So in that scenario where I had minus 2.37% stop loss, I will need to make sure that if I want to keep at least 1-for-1 reward ratio, that my take profit goal is equidistant. If I want to do 1.5 risk to reward ratio, or even a 2.0 1-to-2 risk reward ratio, that means my take profit would have to be double than my stop loss. So in any scenario, if I'm pulling my stop loss down to 4% and I have 1-to-2, then my take profit needs to be 8%. If I have a 1% stop loss and I want to maintain a 1-to-2 ratio, then my take profit needs to be 2% at least. So that's what I mean for establishing them and not breaking them for any trade. So if you stick to your plan, when you get to the markets, you'll be ready for whatever comes, and you'll be able to trade without emotions and start to see more consistent results. So generally speaking, it's easiest to manage feelings if you take the set and forget mindset, the static trade, like I was talking about earlier, where you set one entry, take profit and a stop loss all at the same time and do nothing until one or the other fills. It's easier to contain your feelings this way, but it's not exactly the most promising as far as profit potentials go. Like I said, sure, if you get your take profit goal hit, awesome. Trade did exactly what you thought it was going to do. Good job. Good job. Good job. Now, taking a dynamic trade means you are adjusting the take profit targets and stop losses along the way, like I just said, which can be more mentally daunting because you have to stay focused onto the chart. But it can also be more rewarding if managed properly. So you can exit a trade early or ahead of your initial projections at any time to cut losses or preserve profits. Even if your take profit goal was not hit, profits are profits. And even if your stop loss was not met, it's best to avoid losses if you deem the market is going against your idea after an entry. So what exactly do I mean by this? So don't be afraid to leave a trade early. Let me come back over to our trading view and see where we have set this trade up. So now let's just say that I have set this trade up for 6 hours, right? Here, I want to be out of this trade by midnight. It would be midnight my time. Really? That's not right. How long is this? Okay, 11 hours. My bad. Okay, so this is an 11-hour trade right here. Let's just say that if okay, let me just bring that back then. Boom. So now how long is this? Okay, so 7 hours. If after 7 hours I don't get a take profit goal achieved, the price does something like this. So let's just say I took that market price here, and if price does something like this where it comes down and then goes back up here and then comes down here and then boom. So we're right here, right? So oops, back down up now. All right, so price does something like that, right? So that means I didn't hit my stop loss or my take profit, but now my technical analysis that I did is invalid. I did this 6 hours ago. If price gets to here, 6 hours is 7 hours has passed, right? So after this time passes, my technical analysis that I did 7 hours ago is invalid. It's invalid. So I shouldn't be still trying to keep these same take profit targets or whatever. If I'm in a loss, I could close it instead of taking the whole minus 2.16%. After 7 hours, if I see that this isn't going according to plan, I could just cut losses. Or if it's lucky enough to be in a small profit, I could just go ahead and take profits. I don't have to wait for it to go to the take profit or the stop loss for it to be a successful trade. If you can manage a trade all the entire process, then it's successful. So cutting unnecessary losses is part of the game. There's no reason to let your losses run. All right, let me get one more swig here. I think we're about to be done. Yeah. Conclusion. Chart market structure, form an opinion on price, use indicators as confirmations after you have an opinion, apply multiple time frame analysis to map entries and exits and identify ranges, manage risk according to confidence in your idea, and don't let emotions get in the way of data. Be able to change your idea without emotion. So thank you everyone for coming to my presentation. That was really good on time. I thought it was going to take me more to present that. I'm sorry I spoke so quickly. I wanted to try and fit everything that it takes to go to how I make a trade from start to finish. And like I said, sometimes I'm speed running these trades, so I don't always take those steps. Sometimes I look into it. I know where I'm at in the market because I was just looking at it 20 minutes ago, an hour ago. So I don't always take all these steps. But for you who want to be the pro trader, the full-time trader, if you're not already, please, 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 please take this as a guide and start with these steps. If you have any questions, you can refer back to this at any time. I'm confident that this layout will help you become a more successful trader if you follow these steps. It might seem like a super lengthy process, super lengthy process, but eventually you're going to be putting 10, 20, 30,000, $100,000 in the markets. If you stay the course, if you become a consistently profitable trader, your balance will grow. I don't know what you think your balance will look like in 5 to 10 years, but it will be massive if you continue to trade. So please be careful with what you do and I want to have fun. It should be fun, but like I said earlier as well, this is serious. We do want to pay first. We have to survive. We have to cover our family's living expenses. So take these steps and you'll be able to hopefully be able to set up and plot some trades a little bit better for yourself. So let me come back over to the Zoom now. I'll get out of this and we'll take some questions and answers. If you have a question, please raise your hand and we will try to get it answered. We'll try and take some questions and answers here today, guys. Kind of looking back through the chat now. Y'all got a lot of messages here in the chat. Edward, did you dump your tab for the laptop today? I'm on my desktop today. I like to present from my iPad, but I was getting comments that the format wasn't proper. The screen resolution doesn't fit properly, so I just been using my desktop. How many points do you need to connect to have a genuine trend line? 2 points. 2 points. If you can connect 2 points, that is a trend line. It's valid until it's not. Connecting 2 lows or 2 highs gives you a projection. 2 points. Once you get priced below or above that line, it becomes invalid. Ed, why do you plot the wedge before support and resistance? It's just what I saw. So that's just what my eyes saw naturally. I saw the wedge before anything else. There was no, in some scenarios, you'll see a very large or a very obvious horizontal support and resistance line. In this coin, this is the first time I've ever looked at this coin, and it wasn't very obvious to me, except for that low, the very lowest low that I plotted. So that's why I chose to do the wedge today first. It's just because I saw it first. Oh, look, G-Man said that. Nice. Thanks, G-Man. Do we get this PDF after the lesson? The video will be uploaded to the trading course in the webinar section. Okay, but you can, the PDF, I mean, not going to do much. You need the charts to, I think in the PDF, the only thing you'll get out of that is the emotions part, but the chart and the correlation is where the information's at. So it's going to be uploaded to the trading course. Let me see. Okay, cool. See you guys talking. Thanks, guys. Thanks. Good stuff in here, guys. I like our community talking to each other, helping each other out. Nice, nice. So reading through the chat, always trade with the trend. Yes, sir. In this kind of trade, can be thinking double top. Yeah, possible. Greed will get you wrecked. Thanks so much, Edward. You're welcome. Thanks for giving me a fresher crash course. You're welcome, guys. Thanks for explaining it. Thanks. You're welcome. You're welcome. Great stuff. You need to teach me how to split the screen into 3 time frame views. Okay. Yeah, basically on trading view here, I can share my screen again for that. Cool. So on trading view, if you have this little dealio right here, you could select, I think you have to have a pro membership or something like that. I'm on Pro Plus, I think. Yeah, I don't know. I'm on Pro Plus or something, but I think I can only have 4. Yeah, 4. I don't think I can have 5 or more. So yeah, there we go. You can just put right here how many you want. Yeah, I'm gonna need a bigger monitor. Well, I have multiple monitors, but I don't have the right plan. So yeah, if I'm using multiple time frame analysis, like I said, I usually use 3 time frames. So I'll set it up like this. Well, I'm fitting it all on one screen for you guys. I have multiple monitors, so I'll just put one on each screen. I actually don't use this that often. I just did that so I could present today. Okay, so let's see. Hi, Edward, please. Thanks for the presentation. How do I? Oh, sorry. I'm trying to back up. Great session. Great session. Okay, there it is. Please, can you explain the concept of pips when setting up stop loss? So I mean, pips is a concept from Forex trading. They trade pips. I mean, essentially, you can trade pips in crypto too, but I don't measure out by that. I just measure out by whatever whatever coin I'm trading against. I mean, the concept of pips is exactly the same as price or anything else. It's just a different way of thinking. If you're using Forex, they trade lots and contract sizes, things like that. So like, I don't know. I don't even know. 100,000 units is a lot. And then like, yeah, I think it's 100,000 pips. I don't know, something like that. I'm not a Forex trader. I just simply use the coin trajectories that are here. Thanks, Edward. Great presentation. Thank you for the presentation, Edward. To be able to carry out multiple time frame analysis, do I have to own the premium trading view? No, you can open multiple tabs. You can just open 3 tabs, 12 tabs, whatever. You don't have to have a premium trading view. And how do you get to know how long to stay in a trade? Well, you have to use the trading ranges that is presented to you. So you have to use the trading range that's presented to you to see what is going on and see, okay, well, how long, how many candlesticks. If you're looking at the 1 hour time frame, you think it can happen in 4 candlesticks, and that's 4 hours. So it's going to be dependent upon the market situation. What's a good risk to reward ratio when setting an entry? Oh, look, I'm sorry. It looks like Rasharn Hopkins has his hand raised. So Rasharn, we're going to ask you to unmute. Go ahead and ask your question, and I'll get back to the chat after I answer this. Are you there?
Thank you, Edward. Can you hear me?
Yes.
Great presentation as usual. So my question was, when you first started, was there a specific coin with a specific group of coins with specific price points that you looked at? So for example, would you only stick to coins that are between £5 to £50? Because obviously when you're starting off, capital isn't as big as it will be at the end, I guess, or later on.
Sure. Yeah, thank you for that question. It's a good question. Essentially, it doesn't really matter. I mean, trading for investing long term, that's different. We want to be careful what we're investing long term in. Trading doesn't really matter the asset if you know the asset, if you know the pair, and if you're comfortable with the spreads and the volatility. So, like, just for example, Litecoin is, I think, what, $198 right now, while Ethereum is, I don't know, $4,000, let's just say. There's an obvious price difference there. But if Ethereum goes to $8,000 from 4,000, that's 2x. If Litecoin goes from $200 to $400, that's 2x. So what's the likelihood that Litecoin is going to get to $400 before Ethereum gets to $8,000? That's how you kind of want to look at it and see, okay, what is this actual percentage gain profitability? Just because it's more or less or cheaper or more expensive doesn't mean anything. You can get into Bitcoin, you can buy a fraction of a Bitcoin and make, if you put the same money, if you put $4,000 into an ETH token and it goes up 2%, you made 2% on $4,000. If you put $4,000 into Bitcoin and it goes up 2%, you made 2% off $4,000. It doesn't matter the asset. So try to find an asset that you're comfortable trading and that gives you a secure spread that you don't feel worried about. All right. I hope that answered your question. Christian, looks like you got your hand raised, brother. Do you want to go ahead and unmute yourself and get your question answered? Try to get it answered.
Hello, good evening.
Hello. How are you?
I'm fine. My question is on calculating the stop loss also, because trying to calculate stop loss, it normally gives problem, especially when I'm using leverage. 2% stop loss without leverage and to get 2% stop loss with leverage, it's kind of confusing.
Sure.
Don't know if you get.
Yeah, it can be confusing to calculate that. So thanks for bringing that point up. When you are applying leverage to your balance, first you must look at what your initial balance is. So if you're taking $100, let's just say, for example, you're taking $100 and you're using 5x leverage. So now you're trading essentially with $500. So your trading balance now is 100 with 5x leverage. That's $500. So now if you make 10% off of $500. That's how you can figure out what your profit or loss will be. So you're trading with $500. What's a 10% gain or what's a 2% loss? So what's minus 2% off $500? I don't want to sound like a dummy and try to do that in my head to do it wrong. So let me just pull up a calculator. $500 times 2%. My brain's a little fried from all the talking. So $10. So 2% of $500 is $10. Can you afford to lose that? If you're using $300, 5x leverage, that's now $1,500. So 1,500 times 2% is $30. Can you afford to lose that? If you can, then maybe take that trade. If that sounds too painful to lose to you, then look for a different trade with possibly a smaller stop loss range. Does that make sense?
Yeah, but you're calculating with by adding the leverage amount. For example, you put $100 and you put 5x leverage. That is $500. But if you lose, if you're winning, you're winning on top of your $100. You're winning on top of $500.
No, your win or your loss comes off the leveraged amount. So essentially, it's as if you're trading with that leveraged balance, as if it's yours now, and you're going to take a loss on that balance or make a profit on that balance. So it would be off the total balance now.
Well, thanks.
Yes, sir.
Now.
Yes, sir.
Okay.
Cool. All right. So let me see if I could go through some of the chat some more. I don't see anyone else with their hand raised. What's a good risk to reward ratio when setting an entry? Yeah, that's entirely dependent upon you, your balance, and what you think the market's going to be providing. Generally speaking, I would like for everyone to try and keep at least 1-to-1. If your stop loss, if you're risking a greater stop loss for a smaller profit, you probably should not be involved in that situation. Your profit potential needs to outweigh your risk. So I would say at least 1-to-1. And then the percentages are going to be dependent upon the market structure. So it looks like we have a couple more people with their hands up. Namdi, looks like you got your hand up. You want to go ahead and unmute? Namdi, are you available to unmute yourself?
I'm there. Can you hear me?
Yes.
All right. So just to go off what Christian was asking about, right? So I took a trade today. I took a trade on BTC, with $50 or 50. I don't know. It's on KuCoin and it keeps changing, right? So I don't know if this was an isolated trade or a cross trade. The value keeps changing, but apparently it was $59 and it was 20x. I know I aped in, but it was 20x with an entry price at $60,000 and a mark price at $62,000. But like I said, it keeps changing. But anyways, it says that I'm 50% in profit. But then again, like I said, I took with $50 and a 20x, so my value is like 700 and something dollars. But 50% of 700 and something dollars should be around like $400, right? But it says that I have $18. So it's kind of confusing. I don't know if you got that.
I think I got the gist of it. I mean, talking about numbers like that's a little bit hard without seeing them, but that could be the ROI. So the return on investment being 50% is off your base. So you said you put like $50 into the trade, right? Something like that. So the percentage that being showed your ROI, return on investment, you actually only have $56 in
ROE.
Oh, return on earnings, same thing.
All right.
So if you're using $56 or whatever, and you're trading with the leveraged amount, so that's what you're trading with, but your actual balance was only $56. So ROE is that profit that you have is off your $56. That's what the ROE is. So your real profit was off of that larger balance you were trading, and that was just what the market gave you. So now the ROE is multiplied by that factor based off of your initial margin.
How come
that
the
make sense?
price? Yeah, how come the numbers keep changing? I have a trade on Bybit, but the numbers don't change.
That I'm not sure about without seeing. We can pop into Discord to try and maybe work on that. I don't know what numbers exactly you'd be talking about.
Like the margin leverage is changing. My value is changing. Enterprise is the same. Mark price changes, of course. Even the leverage percentage changes, right? So I said it was a 20x, but now it's telling me it's 13.45x. I don't know. Now
If that's on
13.49. Now it's 13.5.
It keeps changing. It keeps changing live.
Yeah, I'm looking at it right now. It's 13.45x.
And this is on Bybit?
No, KuCoin.
KuCoin? Oh.
KuCoin futures, yeah.
Oof.
I don't get
I've never traded KuCoin, but I'd be more than willing to try and help you in the Discord, see what we can get figured out. I think off the top of my head, I'm not sure, honestly. I've not traded on KuCoin, but I'll be glad to help you.
It's cool. It's cool. I appreciate you, man.
Yes, sir. Does the ROE make sense though, at least?
Yeah, definitely. Yeah.
Okay. On some exchanges, it's ROI, and some it's ROE. It's the same thing, return on investment or return on earnings. So.
All right, got you.
All right. Cool. So I do see another hand up from KP. Let me see if I can just run through these chat messages real quick, and then KP, I'll get your question answered, and then we will call it a session. So Chad wants to know, when doing trend lines, do you use the opens and closes of the candles, or do you respect the wicks and use them as well? Let me see. So whenever I'm using candles, obviously in this example, that big old wick at the beginning was not a wick I wanted to use. But generally speaking, yes, I would like to use the wicks. I would like to use the wicks as well over the bodies. So like the opens and closes of the candles they matter to some degree, but they're inevitable, right? So a candle must open and a candle must close. A wick tells you how far the price actually moved within that duration of time frame. So wicks are important. Grant, thanks for the presentation. You're welcome, brother. Okay, so this is a more general question. I recently purchased a masterclass and slowly working through different courses, but I was wondering if there's a better sequence through which I should go through the courses. My objective is to do it all, invest, trade, and more. Thanks for the session, answer in advance. Okay, so my recommendation, if you bought the master course, go ahead, start with Bitcoin for beginners. No reason not to. Learn something else about Bitcoin you might not already know. And then I would say, if you want to be, this is where you will need to decide what to do next. If you want to be a trader, then I would say start with the investing course, knock it out so you understand the principles of investing, and then tone in on that trading course. If you want to be an investor, knock out the trading course, understand the basic principles of trading, and then study in on that investing course really hard so that you can understand what it takes to be an investor. So that's kind of going to be dependent upon what you want from this. Me personally, I would say that the trading course has a lot of value, so much value in that trading course. It's excellent. I would say that trading course is something you definitely need to look at. Thanks for the time frame screen duplicity. You're welcome. You're welcome. Do someone necessarily need stop loss while scalping on 1 minute time frame? Because my stop loss get hit before finally hitting my TP. Motto, that is something that happens to me all the time, bro. I know people have heard me say before, I try not to trade with stop losses. That's why, dude, because when you're scalping like this, it's like it could, your stop loss could get hit before finally hitting your take profit, right? So that's where it becomes important to properly manage your risk. And you need to say, okay, like, try to get in like just off of a recent low or a swing high for a short or a recent low for a long. So two things, working on your entries for that can help. Adjusting your entries can help. If you have a small stop loss that keeps getting hit, it's because you need to adjust. It's because you need to adjust your entry, right? You need to have a better entry because Your stop loss should be to a recent point of resistance or a recent swing low or something like that. Thanks, Ed, for the presentation. You couldn't listen, was distracted. Sorry, bud. Sorry, Delton. We'll have it uploaded. Right. So I'm not sure what this issue might be. Trading cross. Oh, there we go. One question, please. One question. Great attention. Thanks, Edward, for the class. You're welcome. I'll be my minimum time frame in that trade. Please, if I use daily time frame in 4 hours chat, what will 4 hours chart? What will be my minimum time frame in that trade? So if you're using the daily time frame in the 4 hours and you want to make a trade on that, then I'd say drop down to the 1 hour for an entry like we have today, like we have tried to use today. So that's a good setup. That's a generic setup that a lot of people can take. So then one more chat message here. Please tell me to take profit. Sound funny, right? Please tell me. I actually don't understand that question. Take profits if you're telling me to tell you to take profits. I don't understand that question. It's not really a question. Sorry. If you could rephrase that. Oh, okay. Yeah, you're welcome. KP, what's up, brother? Let's get your question answered if you're with us, and then we'll go ahead and close out for today, guys.
Yeah, hello.
Yes, hello, KP.
Hey, how you doing? Thanks for the presentation. All
All
right,
right, welcome, brother. Thanks for coming.
Yeah, thanks, man. All right, so yesterday, right? I tried to set up a trade in Shiba by using three commas. So like that was my first time using three commas. So that was my first time using three commas. So what I was doing was you had a video that was instructing us on how to, use three commas, how to use the smart trade on three commas. So I was following that guide. So I made my entry. I wanted to use, I was using $500, but I wanted to risk 2%, which would have been $10. So I did everything. So then when it got to the take profit part, that's when it got a little tricky because in your video, when you were taking profit, I think you took profit at like 2% from your buy-in, from your buy-in order. You took profit at 2%. So I tried to do the same thing, but it didn't let me. So then I'm like, okay. So then I tried to adjust to take profit a little higher, and it still didn't let me take profit. So then like it let me take profit like so high, like so like I even forgot what number it was, but like the take profit part was so high to the point where I'm like, I don't even think the price was even going to hit that, but it allowed me to take profit there. Then but also when I was setting it up at the 2% take profit, it gave me like a warning sign, like it had like this yellow triangle, and it said something. I forgot what it said because I'm not in front of my computer right now. So then when it went to the so then when I got to the stop loss, right, I wanted to risk 2%. So for some reason it wouldn't let me risk 2%. So I use my what do you call it? I use the long position tool. So I use the long position tool on on the trading view that they give you on three commas. So what I did was I manually moved it. Well, actually, wait. So before I manually moved the stop loss, the 2%, like when I put in 2% for stop loss, the the margin that they gave me from my buy-in was so tiny, like it was like real small for real. So I'm like, nah, like this can't be right. So I manually moved it down to the 2% stop loss that they had on my long position tool. And when I noticed, and then when I went to look at the stop loss section on three commas, it wasn't actually 2%. Like they said it was like 9.44%. So I'm like, nah, this isn't even 2%. Or could it be? Because I'm like, well, then again, I am risking, $10, and maybe 9.44 is kind of close to $10. And I'm thinking, okay, maybe this might be actually, stop loss. So I entered the trade, right? So I entered the trade. So I'm like, so I left. So, but something told me to come back and just watch it. So I came back and watched it because I wasn't really too comfortable. So about it. So I went back and I was watching the trade, and so I was in the red. I was losing. But when I was losing, I was noticing that I was ready at like I saw the dollar amount, and it was telling me that I'm down $13, 16. So I'm like, what? So I'm like, what the? So then I'm like, okay, hold on. So I'm watching. Okay, so I was watching it and hoping and praying that it came back up. So finally, when it came back up to about $6, because it says that I was down $6, I hopped out the trade. So I'm just wondering, was that because of the price of Shiba? Because Shiba isn't actually even 1 cent. So is that the is that the reason why I wasn't able to set up my take profit or the stop loss?
Well, it can. I'm sorry to hear what you went through, but it can actually be tough to say without having had been there to see exactly what happened. Some things that I can say that possibly happened is whenever you're setting up your entry, the take profit goal has to be at a reasonable price range. So if price is already right here and you're setting a limit for price to go down, so if you set the price target down here, and then price actually has to go down to set your limit order. Well, if you're trying to set your take profit, for example, price has to go back down through your projected take profit and then come back up like this. So it comes down like that number. Then your take profit actually has to be higher than where the current price is. Same for stop loss. If you're trying to set a stop loss, then the price actually has to be valid for the pre-input to be set up that way. That's just one thing that I can know, because I know that's happened to me before, where I'm trying to set up a scalp and I want it to go down. I'm waiting for price to go down and I'm trying to get like a 0.25% take profit target. And it's like, I'm sorry, that's invalid because it's lower than the price the asset's currently being traded. So that I know
Okay.
that can be a possibility. But like I was telling Namdi earlier, we can check this out in the Discord server as well too. If you're not in our Discord server, you should join there, and maybe we can see if we can get you some extra help. Because without actually seeing this scenario, I'm not too sure. I think some other guys are helping Namdi in the chat, but yeah, Discord is also a place where I lurk, so I'll be more than happy to help you there.
Yeah. I'm sorry. I don't mean to cut you off, but one thing I do remember was at the part when I was trying to do 2% profit. It was saying something like it was warning me, saying that my minimum, like the minimum or something, I guess I didn't reach the minimum or something. I don't know, but yeah.
Whatever the error message might be next time, try to screen capture it and submit it if you get it again. An error message usually helps us troubleshoot quickly, so we might be able to get that figured out.
Yeah, I'll do that. All right, thanks. I'll do that. Thanks, man.
Yes, sir. All right, fellas. Well, I would like to thank everybody for coming. I hope everybody learned something from the presentation. We're going to be uploading this as soon as possible to the trading course. And I'm probably going to try and get that done up before like Monday or something, but definitely will be uploaded ASAP for you guys to review. Now you guys can check back to this awesome information. I know I said no more questions, but I see a simple one from Alex. Difference between market and limit order. Alex, a market order is at current price. So if you take a market order, you're going in right there at that price at that point in time. And if you set a limit order, it means you have a desired entry. So you're waiting for price to reach a certain amount before you purchase the asset. So that's essentially the difference. We have a video about that in the trading course. If you're a student, go check out that video in your trading course in fundamentals, in the fundamentals section. All right, fellas. Thanks for coming, everyone. Thank you for listening to me speak. I really appreciate everyone's time today. And I hope that what we witnessed here today can help you plot a trade. Cheers, everyone.